Hi everyone, so welcome to Investing for Value. So recently I've done quite a few stocks that you guys have asked me to research into, and you've probably noticed that I'm a bit critical of these companies sometimes. I've gotten quite a few requests into companies that impress me because if I hold quite a high standard in terms of what I look for, these companies must be interesting to you guys. So I'm going to recommend you 5 companies that I quite like in terms of growth. Though I did save the last one to just, balance it out in terms of anyone that's not interested in too much growth and a bit more stability. Let's just dive right into it then. So we've got Cardlytics. So Cardlytics is a company that does reward programs for banks. But that's not the real gem. The real gem is the data they get from this rewards program. So every time you spend money, they get an idea of what you like to buy and how you like to buy it. So then they can just basically take this data and then basically sell it to marketers and then teach them customer patterns and customers, and they pay a lot for this data. So for a long time, this company was building a rewards program for banks, trying to accumulate as many customers as it could. But now that they've accumulated this big foundation of customers, they can start utilizing this data and building out their revenues. If you look at this share price, it trades at $95.87. But did you know 12 months ago this company traded as low as $14? So $14 and now it's at 95. So you can see how the markets embrace this company because they go, all of a sudden this company didn't seem to be worth a lot because they were just building this foundation and building all this data. But in today's age and going forward, data is incredibly useful and very lucrative. So you can see why this company just jumped all of a sudden. And you can also see in the last 3 months for the September quarter, um, they grew their revenues by 63%, which is an incredible growth, especially when you compare to the 9 month. The 9 month was only 37%. So I expect from this company going forward, their revenue growth is going to go from strength to strength because they now have all the data. They now have the ways that they know that they want to sell it, and they're going to start focusing on their revenues. And management has reaffirmed this goal. So I think this is a company that's not only going to be strong this year, it's going to be strong for many years to come because the one thing the oil of the 21st century is data. So you want to invest in data. Why oil is going down, data is going up. And that's the kind of industry you want to be focused towards in. So, that's kind of why I see this company being really good. Like, if you've got any other questions, definitely let me know about it. I'm going to move to the second company. So it's called Plug Power. For anyone that's very, environmentally conscious and really wanting to push, innovative technologies. Plug Power does hydrogen and fuel cells. And this is a company that's share price has done really well recently as well. The last 12 months it traded as low as $1.80, and now it's at $5.57. It's kind of gone up quite a lot, and it's given a valuation of $1.63 billion. So basically, this company is selling their technologies to a lot of companies, and they're utilizing it in their vehicles. So you've got companies like Amazon and Walmart who are embracing this, and also DHL has recently signed on. So I think this is the year for Plug Power, especially the big drive towards these technologies. And you really have to thank Tesla for making this big push. And also with this climate change, a lot of companies are under a lot of pressure to start looking at alternative technologies. And Plug Power, I think they're exactly right in this perfect spot to really capitalize on all this. So in 2019, their revenues were about $245 million. and then by 2024 they expect it to be $1 billion. So you can kind of see why I'm excited about this company, because in the next 4 years we're going to see this company basically increase their revenues fourfold. So you can see that is huge growth potential, especially in, like in an environment where this technology is going to be in huge demand. So you can see why I'm excited about this. When you can grow revenues that quick, there's going to be a lot. And look at the valuation. Like you've got a company that's worth 1.6 billion, and they want revenue of $1 billion. So you can see where the value proposition is. And then the revenues are going to follow suit, because as they improve their technology, the cost comes down, and they're able to really push things out. So in terms of this, that's why I'm really excited about this company. The next one I've got is Progeny. So like Progeny is a company that specializes in fertility treatments. So they're not the ones that focus on the main products. They're the middleman, facilitating these things. So if you're someone who wants to get pregnant or have a baby, you're going to talk to Progeny. Progeny is going to set you up with this perfect plan, and then they're going to recommend you some of the best specialists in the industry. So you might be thinking, why does a middleman company like Progeny all of a sudden, get this spotlight from me? Well, the really good thing about this company is, well, they go to all the major tech companies, and then they sell their plans to the tech companies. Because if you're working at like Facebook, Google, Microsoft, and those are all their clients, you're going to be wanting the best plan for your employees. Your employees, especially if you're working with computers, like you can. It's debatable what being around computers can do to, fertility, or the male's productive system. But the thing is, you want to offer your employees the best beneficial plans, especially if you're one of the top tech companies in the world. So when you sign up with Progeny, they're going to set you up a plan, and then afterwards they're going to connect you with really, some of the top specialists, and they've actually got proven results that people who go through Progeny have a much more higher percentage of having children. So when you think about that, that's an incredible, proof of concept that you can just show people, and you can sign up a lot of customers. And that's the thing, they have been signing up a lot of customers. So this share price has basically doubled in that time, in the last 12 months. And it's selling about $30, and it's giving a valuation of 2.5 billion. So this is a company that listed about 6 months ago, so it's still quite new, but there's a lot to be excited, particularly about the revenue growth. So in the last 3 months, they've grown 120%, which is incredible growth. Like any company that grows at over 100%, is going to get a lot of attention. Though this one seems to not have gotten a lot of attention. Though like I think it's definitely worth a watch for everyone. In the 9 months, 116%. So this isn't just short-term growth. They're proving this on a long-term basis that they're going to be growing really quickly, particularly if you're signing up some of the largest tech companies in the world. And mind you, they only have about, I think they have less than 100 clients, though it might have gone up, though, like 100 clients. Like, think about all the large companies in the world, and they only have 100 of them. So they have a lot more potential to just go on and sign up even more people, as even more companies, because this company is very smart about things. They sign up companies instead of trying to sign up people individually. So they go to the top companies, sign up the company, and then sign the people up in the companies. So it's a very smart way to just capture whole groups of people, and get a lot of revenue out of it, charging really nice premium rates. Because what's one thing that tech companies have a lot of? It's financial resources. So this is a company that's utilizing it really well. And also this is a company that no matter what the situation is, people still think about having children. So this is kind of a company that is, in a sense, it can be recession proof in a sense, because basically your revenues from tech companies, who are good or bad times, are going to be earning a lot of money. And people are still going to be planning children regardless of the time it is. You either want children in present time, or do you want them in the future. And this company is going to be vital, particularly if you're showing that you can just do it a lot better than anyone else. So it is a company that's building a lot of trust. The longer it's in the industry, the longer it builds up the trust between the people, and it's also building up a strong network. So if you're one of the top specialists in terms of fertility in the world, and you've got one of the best companies recommend you top clients from some of the best tech companies in the world, you're gonna just close off your office to anyone else. You're just going to be like, okay, the only clients I accept are the ones that Progeny recommends me. Or majority of them will come from Progeny. So that's how they're basically securing some of the best specialists in the world, because they're just working with Progeny. So even though they're a middleman, they're slowly building something that's really vital, and really, starting to have a competitive moat around it, that other companies just can't come in and start taking their customers. So that's kind of what I see about this company, that it's grown really quick, and it's slowly building a really strong moat for itself. Alright, so let's move to the next company. So I've got Paloma Holdings. This is like, company got me, name's always a bit weird. So this is a company that does insurance products. Share price is at $60.02, giving a valuation of $1.41 billion. So what impressed me the most about this company is the revenue growth, and it's profitable, hugely profitable going forward as well. So the revenue is growing at 62.7%. So for a lot of companies growing at that rate, you're going to be thinking that they're not going to be making much money. Though this company, and their adjusted net profit, because you'll look under the financial statements and it might not seem the same, but if you take out the non-cash stuff or the one-off impacts, their net profit last year was $37.9 million, up from $19.8 million. And then the guidance is going to $50 million. So in the space of 2 years, it's gone from less than 20 million to over 50 million in profits. And it's got an insane growth rate. So when you look at the growth rate, when you look at the profits, this is a company that really is desirable, particularly if you like your insurance companies. This one's a very smart insurance company that does analytics when it comes to how they judge your premiums and everything around it, and how to just specialize and tailored products so that they are on the winning side in terms of products they sell. Like, they don't want to sell you products that they will lose money on. They want to sell you the products that they think our customers do need, but also that they won't need all the time. So think about earthquake insurance. Not a lot of people are going to need it. Well, not on a frequency basis, but they get the premiums, and then they can just use those premiums, and they generally earn a lot, so they know the places to target. Though if an earthquake happened, they'd be hugely affected. Though, they look at the chances of things happening, and so far they're proving out a business model that is growing really well and hugely profitable. Okay, so this brings me to the last company, just to not like really push the time limit on these things. The next one, I've actually done a video of this company, though I noticed it hasn't gotten as much views as some of the other videos, so probably a lot of people haven't actually seen this video. So like, I definitely recommend watching it. I'll try to paste the link up here when I have a bit of time. Though this is the company, Innovative Industrial Properties. So basically this company is very smart in the way they've done their business. They've actually gone to cannabis companies who need a lot of cash, because they've been definitely burning a lot of it. They buy up the facilities and then lease them back to the company. So it works out for both companies, right? Cannabis company needs cash, and they need the facility. So this company buys it up. The cannabis company gets the cash, and the cannabis company gets to lease it back from these guys. And they also do some extensions onto the existing facilities, and they've been doing it in such a good fashion that the companies are actually really impressed with them, that they are willing to pay a 13.3% yield. When was the last time you saw a property company get 13.3% yield with an average of 15.4-year leases? So that is an incredible return on property. So that's kind of like for a growth investor who loves these extremely high growth companies. This is a company in terms of property that I never really thought that property could be so lucrative. Like this one's really hitting it out of the park. And not to mention, they're paying, their last dividend was $1 per quarter, which is an incredible amount. So when you look at the dollar per quarter, you'll think that's basically, if they pay for the next 3 quarters, that's which management thinks they're going to do, that's $4 per quarter on a share price of $105.58, and on a market valuation of $1.8 billion, and they have $350 million in cash. So meaning they have a lot more room to expand. This company's only spent about 600 million growing the existing portfolio, and now they've got another 350 million to continue that expansion. So I think they will have a huge potential using the current money to just keep growing this existing portfolio, and especially with these type of returns, they're going to do very well in the existing year and the years going forward. So these are the 5 companies I recommend, it being very nice like growth stock plays for the current year and the many years ahead. Let me know if you want me to go into more depth of any one of these companies, or any other stocks you want, or any other questions you have. Just post them below. I hope you enjoyed this. Hope you learned something about these companies, because these are certainly not companies that you will see commonly talked about all the time. Until then, good luck investing, everyone.